It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream, Series 32, episode number 1. In the aggregate, that's episode number 187, starts here. It's a deal, ladies and gentlemen. Time to tender your shares in the Greek stock exchange as Euronext looks to buy 100% of the Greek monopolist. Another remarkable Stefan Bougen deal looms. Same time, there's a Scientology probe over at the Dream Exchange after the SEC was alerted by an article in the Wall Street Journal. Elsewhere, well, back in London, for once the LSE, the London Stock Exchange, is pioneering, albeit it's perfecting ASX's failure as a service model. The latest mistake, rising to the bait when goaded by Euronext. As LSEG shareholders endorsed remuneration reluctantly, news filtered through that Mexico had a better IPO market than London, and the LSEG has slumped to 23rd. What an embarrassment in the global new listing rankings. In today's episode number 187, our guest is Hayden Van Der Post. The topic, quantum finance. Well, with a 15-year background in finance, former child chess prodigy Hayden Van Der Post is seeking to lift the hood on the upcoming world of quantum computing and thus quantum finance. Based upon 15 years experience in finance, all manner of interesting experiences around the world, being an expert Python programmer and indeed, as I said, a child chess prodigy. Hayden, welcome to the show. Where in the world are you today?
Great. Thank you, Patrick, for having me. I'm currently in Seattle.
Seattle, my goodness. Welcome from the West Coast. Then you're quite a long way from me, sitting in London today.
Okay.
Yeah, just a little bit of distance between the two of us. So tell me then, Hayden, I mean, how did you first get involved in the wonderful world of finance?
Well, I actually, I consult with companies with quantum financial modeling. So using quantum theory and advanced simulation to forecast risk, optimize portfolios, and understand uncertainty with more precision. Ultimately, I've tried to build a consulting business around being on the cutting edge and the forefront. So quantum theory is the up and coming along with AI.
So quantum theory, run us through it gently. Give us a little bit of an overview of what we should be looking at in terms of what quantum theory is.
Sure. So in the finance context, quantum finance is the application of quantum computing and also quantum theory, which is the mathematical modeling of quantum into the finance space. So what that means is we can simulate the future faster with more precision. And in the context of classical computing, which is binary ones and zeros, quantum gives us the ability to be dimensional. So we're moving to a simultaneous state of being the 1 and 0 at the same time.
So the 1 and 0 at the same time, the possibility to be definitional. What exactly does that mean when it comes to how we analyze markets?
So we call this idea superposition. So it's based on how particles can interact and exist in two places at the same time. So we can measure this state, and it's called a qubit. So the qubit gives us the ability to ultimately be faster and at a greater scale. With traditional computing, it's a linear process like a waterfall. With quantum computing, it allows us to be to exist at a greater dimension just overall.
So you've got this concept then. So what we're talking about is, I mean, if we think about the history of computing, it's been defined in many ways by Moore's law, looking at the idea of the quantum increase in processing power. So essentially, quantum computing moves us up a generation and effectively changes the whole rules of the game in terms of how we can manage data?
That's right. So the one thing to keep in mind is we're not moving into kind of a fifth dimensional reality, coming up with like some new sort of state. What it ultimately does is when we measure the superposition, it still collapses into a 1 or a 0. In the context of finance, this is like a buy or sell. So we're looking at the buy and sell option at the same time. It just means that we have done things faster with more accuracy. So this has an application specifically in high frequency trading. But this is kind of where things are moving with finance. Yeah.
So with high frequency trading, I mean, the application is what you can analyze more data and make your orders move faster from the processing power. Oh,
That's
interesting.
Right.
So yeah. How much of a quantum does that give you as an advantage then in terms of what could be for high frequency trading?
It could be a factor of 10 to 100 times. So the scale of the improvement is potentially enormous. And it's fundamentally going to change the way that markets operate. And this is going to be the next revolution in finance, just as how AI has been revolutionizing things over the past 5 to 10 years. The next 5 to 10 years will be the quantum revolution. So that's where my book comes in, is it's getting ahead of all this, and we're breaking things into the theory and application side.
Interesting. So your latest book, which is called Quantum Finance, if I'm not mistaken, you've just published that quite relatively recently. Walk us through what the book explains to us about this brave new world.
Great. So there's two parts to the book. The first part is looking at the fundamental theory of how quantum is applied to finance. So we're looking at the mathematics and how that fits. And the second part is the application, the actual programming side. So there are a number of programming languages that have been developed for quantum computing, developed by Microsoft and IBM. So we have Qiskit and we have Q#. Those are primarily, and so I go into how to use those in an algorithmic trading context and build out financial modeling.
Interesting. So just walk us through that for a minute, because I mean, you mentioned earlier on, well, we mentioned in your introduction that you're an expert in Python.
Yes.
How do these languages differ with Q# and so on to, say, something like Python?
Well, what I do actually is an integration of Python with this to create a hybridized model. So right now, quantum computers or quantum computing is not at the state where we can readily use it, because quantum computers are fundamentally unstable. So the practical application in 2025 is more quantum theory applied to financial modeling, and that still relies on traditional programming languages. So what we're looking at is essentially quantum Monte Carlo, and that's one of my specialties, actually. Yeah.
Quantum Monte Carlo scenarios. Okay, so run us through that, because that's like a multi-dimensional series of Monte Carlos at once.
Yeah. So in classical finance, Monte Carlo simulations explore one future at a time, whereas quantum Monte Carlo explores all possible futures simultaneously. So classical models are binary and sequential, and quantum models are dimensional and parallel. That's the quantum advantage, and the ability to simulate faster and with greater precision, as I've been alluding. Yeah.
Okay, so this is very interesting. So you're talking about, therefore, at the moment, the actual quantum computers are probably 5 to 10 years away, because they're quite unstable, which therefore raises the interesting idea that what they must be like with an AI built in. They would be ghosting all the time with some really, really wacky stuff. It's like tripping, I suppose. But
yeah, the quantum thing with, so AI and quantum are going to go hand in hand. AI is going to give us the ability to rapidly analyze financial information, and then quantum computing gives us the ability to rapidly execute on that. So it's really a full fundamental shift that's going to be happening. Right now, AI has definitely dominated the financial space, but we we still aren't at the quantum computing level, although they're making progress continuously on this.
Interesting. So the bit I'm still not quite sure about is, how do you develop quantum finance models at the moment, given the fact that the computers themselves that you're using are not quantum?
We're actually using quantum mechanics, or the mathematical modeling that was developed for physics, and applying that same formula theorem to financial modeling.
Aha. Okay, because I was in a kind of Schrodinger's cat syndrome there. I wasn't quite sure where we were coming to, but now I understand.
Yeah. So that's really where the body of my work is, quantum financial modeling. So for forecasting risk, optimizing portfolio, and just understanding uncertainty with more precision. And I go into all of these topics in depth in my book.
Cool. So when we're looking at what you're using this quantum for, is it in order to help you just purely with the risk side, or does it also help you with trying to formulate strategies?
Formulate strategies overall. But for sure, there's a lot of different areas that it can be applied to, but forecast and risk are the primary domains.
Very, very interesting. So you've got a situation where this is therefore, in one sense, a much bigger funnel. It's allowing you to analyze a lot more data in a lot more ways.
That's right.
Right. And then it's also allowing you to equally model your risk in a lot of ways simultaneously that previously you had to take quite a lot more time in order to look at.
That's correct. Yeah. So it's a fundamental shift that's going to give you the capacity overall to move at a speed where you're like 10 to 100 times faster and at 10 to 100 times greater scale.
Wow.
Of your modeling capacity.
Of your modeling capacity. And then you can deploy AI within this framework in order to accelerate the analysis, accelerate the risk management, and presumably accelerate the execution to get your trades done faster if you want to fully automate.
That's right.
Fascinating altogether. So, I mean, how does this impact when you're working with clients, what they actually do? I mean, do they end up trading more? Do they trade more profitably? How does it work for them?
A lot of it is actually focused on the preliminary application. So we're doing a lot of testing about applying this theory to actual market outcomes. It's really at an elementary stage, if you will. So we're not essentially at the point where this is widely applied, but companies, they want to be on the forefront of this implementation, and that's where my work is applying this at the early stages.
Fascinating. And if you don't mind my asking, what are the sorts of clients? I don't mean what are the clients. I mean, what are the sorts of clients that you're dealing with? Are they hedge funds? Are they family offices, buy-side institutions? Who are the people that are particularly interested in this at the moment?
Right now, it's private offices and private equity type firms.
Very interesting. So if you don't mind what do private equity firms do? Simply crunch a lot more data?
That's right. Yeah.
Okay. So they're crunching a lot more data on what the deals are they can potentially do, or they're using it. And then are they using it also at a kind of a due diligence stage to crunch in greater detail?
That's right. Yeah. Modeling future scenarios and probabilistic outcomes.
Very interesting. Very interesting altogether. So therefore, I mean, at the moment, quantum can be used across any asset class or any kind of scenario?
Yeah. In any scenario where you're looking at future states, or you're trying to simulate future states, better said.
That makes a lot of sense. Yeah, I can understand how that goes together. Very, very interesting. So, I mean, from your own standpoint, have you seen a big uptick in work or interest in this area in recent times?
For sure. It's really, like I said, the next revolution is going to be quantum. If you would want to characterize the 2020s as AI, the 2030s will certainly be quantum. That's where there is a lot of work and development left to be done. But once this is unlocked, there's going to be another revolution, just as AI has revolutionized finance in the 20s.
Very interesting. So when we look at where this is all going, I mean, what's the best way that someone who wants to deploy quantum finance models can start? Presumably they buy your book, I suppose.
They for sure can start by buying my book, but Microsoft and both IBM offer tools. As I mentioned, the Q programming languages and Qiskit. So there's a lot of documentation on this provided by IBM and Microsoft where individual users can actually start to get into and working with quantum models.
Ladies and gentlemen, we're chatting here with Hayden Van Der Post. The topic is quantum finance. Absolutely fascinating and riveting discussion so far as we go through indeed a huge ream of data that we're trying to understand and analyze from this brave new world of computing. If you've got a question for Hayden, do send it in to us. In the meantime, if you want to make sure that this, your presumably favorite program, gets further up the ratings, then don't forget to send us a little bit of love, ladies and gentlemen. That would be really helpful. Anybody who's hearting or liking these streams, whether you're watching us on Facebook, LinkedIn, YouTube, or wherever else, it is always a great help because the AI loves to see something being loved. Now, Hayden, I mean, how did you get into this whole area of looking at quantum finance? What drove you into that particular area of research?
To be honest, I did develop an interest in quantum physics in high school. So that's where it started. And in my bachelor degree, I did do some coursework in quantum. So there was an outside, there was an initial interest in this, and my work in finance has surrounded a lot around surrounded automation, and I did a lot of work on AI application and machine learning. And then the next logical step was I'm always looking for where are things going next. And that's where quantum has come in.
Okay. And so how long have you actually been in the quantum field?
The past 3 years.
Wow, 3 years. I suppose that must be like dog years or something like that compared to the rest of humanity, right?
Yeah, that's right.
So in terms of quantum adoption at the moment, I mean, what do you reckon is the percentage of people who are engaging with financial markets who are actually looking at quantum finance models currently?
I would say that it's actually a lot larger than people think. So the large investment banks and firms around the world do typically have research divisions that are looking at quantum computing and quantum financial modeling. And so it is, I would say that at least over 50% have some sort of research basis for it in terms of the larger firms.
Okay, that's very, very interesting.
It's widespread. It is widespread, but it's not well known, and a lot of it is still in the early testing phase.
Right. So not a lot of people are putting real money behind it, but a lot of people are trying to use it to see just how good it's going to be.
Yeah, because ultimately, it's going to unlock this whole stage of finance, and there's also lots of applications to cryptocurrency or and even AI itself. So once quantum computing is fully unlocked, everything changes.
So explain to me a little bit about, first of all, let's say about AI. How does quantum computing change the game for AI then?
For AI right now, if we think of AI as language models, what we're really doing with language models is predicting text word by word. But a lot of theorists suggest that to get to an actual AGI level of where we would have either simulated or real consciousness, we need quantum computing. So it really would move from something that is the way ChatGPT is now to a full artificial general intelligence.
Wow. So artificial general intelligence, that's the thing that everybody's terrified of because it's suddenly going to come for our civilization, right?
Yes. Yeah. So quantum computing, it unlocks that as well, potentially. And so there's a whole interest in breaking this. And for the 2030s, in a lot of different domains, that's where things are going to be the focus.
So obviously that becomes very interesting, because presumably then, does that mean that we're likely, do you think, to suffer a regulatory backlash against something like quantum computing? Are regulators going to try and hold it back?
I think there is potential risks there, because quantum computing would allow people or nefarious actors to break all standard encryption protocols. So that is one of the things that are looked at as a risk. But because we haven't really got there yet, there isn't a big alarm on that right now. Once we're there, like your standard encryption security for almost everything becomes vulnerable to quantum computing because of the speed and scale that it can operate.
Interesting. Okay. And then the other thing you were talking about there was, you mentioned the impacts with potentially cryptocurrency and things like that. So try and walk us through some of the aspects, either already apparent or theoretical, that are going to be the impacts on crypto and the quantum finance model.
Well, ultimately, it's the same application for modeling cryptocurrency, but quantum computing could potentially break the blockchain. So that's one of those concerns that's there, that Bitcoin or something could be essentially useless if somebody was able to kind of hack that effectively with quantum computing and quantum encryption models.
Okay, so I don't want you to explain to us how it's done or what happens, but I mean, you say break the blockchain. What effectively would be the impact of that?
That Bitcoin would become worthless overnight. So
okay,
yeah, it's quite existential in that sense.
Oh, that's all right. We're 22 minutes in. Go on, give us a little bit of existentialism here, Hayden. I'm quite fascinated. I mean, I'm just interested. I'm trying to understand. I mean, I kind of get the idea that the quantum computing can break the cryptography of the blockchain, but I'm just not quite sure I necessarily understand the whole process of what it's going to do to induce block anarchy that therefore is going to undermine the distributed ledger.
For the distributed ledger, you wouldn't be able to, someone would effectively be able to create new Bitcoin. That would be kind of the risk, or steal current Bitcoin. So it would completely undermine the entire blockchain in that sense.
Interesting. Very interesting altogether. So therefore, what you're saying is, in a world of quantum computing, we might be better off just going back to old single standalone databases that don't have the same issue in terms of that, because they can have what quantum cryptography put up front?
Yeah, that's exactly it. And so we move into a world where everything kind of becomes unknown once we hit that stage. And it's going to be hard to predict when we've really crossed over to that threshold, because like I said, large investment firms or technology companies are heavily investing in quantum research, but this isn't public. So someone will get to this, and it will be kind of unknown when that happens. It will give somebody a completely like a competitive advantage over everyone, whoever has this technology.
Right. So that obviously begs the question then. I mean, when the technology comes in, presumably it's going to be like the history of so much technology. It's going to start at megatastically expensive. Is
That's
there
right.
then likely to be a Moore's law? Well, sorry, start from there. Presumably it's going to be incredibly expensive.
Yeah, so right now, quantum computers are very expensive, and they operate on kind of the megabyte level, or it's not even comparable to what classical computing can achieve. So the costs are prohibitive, and even with the hardware itself, once you scale beyond a certain level, it becomes unstable.
Right. So they have an issue with scalability, which is so interesting, because always the supercomputer versus microcomputer issue became so interesting, about 25, 30 years ago, because people realized that you just network lots of microcomputers together and they actually work better than one big supercomputer for reasons I'm not sure I ever quite understood. In the quantum, is the case going to be that you have to have quantum computers themselves are likely to be relatively restricted in size, at least in their early stages, to make them more reliable?
That's right. And quantum computers require specialized cooling. And so it's not as if like right now, it's going to just be applied to people's laptops or desktop computers or even servers. It really requires a specialized setup and facility to host quantum computing at scale. So there are a lot of limitations right now in that, but like I said, there's a lot of research being done to make this more mainstream.
Okay, but that's interesting though, because therefore what you're saying is quantum computers use a lot more power.
That's right.
Yeah. And they also need a lot more cooling, which also sucks in a lot more power, or presumably sucks in water if you're going to do water cooled or whatever. Yeah. Therefore, I see one problem, and maybe this isn't something you've been looking at, but I'm quite fascinated because presumably that also has an impact upon the established worlds of data centers, because the existing data centers, for example, for financial markets, which all sit in Mahwah, New Jersey, or in Essex, just outside London, they're effectively sucking up as much power as can be afforded to them without the lights going out for the people who actually live in Mahwah.
That's for sure. And there has been, like, obviously a huge investment in data centers over the last 20 years. And quantum computing is not as simple as just swapping in new server racks. So the amount of investment that's required to completely transfer over the current centers to a quantum model, if when that ever becomes real, will be enormous. And for sure, power consumption will also be likewise enormous.
So that's quite interesting, because then potentially we could see an upending of the distributed computing architecture, and particularly the architecture as quantum grows for financial markets, because as people go to quantum, they're going to need places with stable data, which may well mean that the data centers in the USA end up, I don't know, in the middle of Texas or somewhere, as opposed to where they currently are in the northeastern states of the USA.
That's right. And for sure, companies will optimize the location for that at the time. But yeah, we don't know exactly where they would build quantum data centers. It's very early for that.
Right. No, but it's an interesting point to consider, because it's not going to be, I think a lot of people think, as you just alluded to, that people just, take out this thing out of this rack and then suddenly stick in a quantum computer and then everything's going to be absolutely easy. Whereas this sounds more like that's a bit like changing the engine from...
Yeah, it's a completely different paradigm. And right now, like I said, the current limitation is as you scale the computing, it becomes more unstable. So it's not as simple as just like networking a bunch of quantum computers. The hardware itself is actually very sensitive to small changes. So very specialized centers and facilities have to be developed to house the hardware itself.
We're going to come back to the issue of stability in just a moment, but I want to give Hayden a rest here, because he's been going great guns, distributing himself in a quantum fashion over the course of the last half hour. My name is Patrick L. Young. You're here with IPO-VID. We're in episode number 187, talking about quantum finance with the author of the book, Quantum Finance, Hayden Van Der Post. However, let's take a step back and talking about instability. We're better to stop off than the year 1873. That was the year J. Cook & Co. went bankrupt, stocks plunged by a third, 32 Wall Street firms folded, and the NYSE had to lock its doors for 10 days. Here's a lovely video made by our wonderful video team. Meanwhile, in Big World, on September the 18th, 1873, it was the start of the Panic of 1873. J. Cook and Company, a banking firm deeply tied to America's railroad boom, declared bankruptcy. The collapse sent shockwaves through the financial system, igniting the Panic of 1873. The fallout was immediate and severe. Between 18th to the 20th of September, prices of leading issues plummeted by up to a third, and 32 New York Stock Exchange member firms declared insolvency. Trading halted after the first call on September the 20th, with NYSE being shuttered for 10 days, the longest closure in its history until that point. For more in Big World, like or follow. And there you go, ladies and gentlemen, those Big World videos, of course, based on the Big World, you can read and Exchange Invest, pick up and subscribe to Exchange Invest via exchangeinvest.com for all of the latest news updates in the world of financial market infrastructure. Now, we're catching up as well as we have been ever since the summer break on some of those fascinating books of the week that Exchange Invest picks out. September 27th to the 3rd, we had an absolute classic, Extraordinary Popular Delusions and the Madness of Crowds by Charles Mackay, a popular history of popular folly in human society. This one really is unmissable. Whatever generation you're in, I suspect even in the roaring 2030s, when we're all looking at quantum computing models, nonetheless, we'll still find Popular Delusions and the Extraordinary Manias upon the crowds of this world to be really, really interesting. And that brings us, ladies and gentlemen, right up to this week's. Finally, we're current in only early October after our summer break. On our current book of the week, that is Bank on Your Neighbor. You may remember the wonderfully charismatic Mel Dorman joined us just a few weeks ago to talk about this book, Bank on Your Neighbor, a people first real estate strategy to build wealth together. It's a radical practical guide to seller financing and community-based investing, written for everyday people who are ready to reclaim financial power. And I would actually wholeheartedly recommend you, all of those who are watching us today, amongst them those who very kindly have given us a little thumbs up and a little love already today, pop in, check out that Mel Dorman edition. She's a wonderfully charismatic woman, and it was a really, really terrific show. So, scale, instability in particular, that's where we ended up with Hayden Van Der Post talking about quantum finance, his book, which is out right now. Tell me, do we have an idea either what the solution is going to be to make quantum computing more stable, or do we have an idea when we think that the brainy boffins are going to actually fix it?
Yeah, so that, like I said, that's one of the main engineering challenges in quantum computing, and there is a lot of work being done on that, but we don't have the exact answer yet. And if we did, then we would be firmly moving into the quantum era. But right now, that's still an engineering challenge that needs to be worked out.
Okay, and therefore, I suppose the other question I do have is, again, going back to this, Moore's Law thing. I mean, one of the great, most exciting issues for all of us who were computing our way through the 80s, the 90s, and into the 2000s was the way computer power expanded exponentially. At the same time, prices tumbled. Are we expecting that there is going to be the same ability to produce scalability into quantum computing, or is it different?
I would say that we would expect the same thing, just like anything. Once we establish how to develop quantum computing and have it be stable, there sure will be a decreasing cost curve to application implementation.
Interesting. Okay, so essentially, although it's a new quantum, we're looking at something that's going to look very, very similar to what happened elsewhere, and that's going to deliver us this fascinating, brave new world. So when it comes to financial markets, Hayden, I'm interested to know whether we think that that's going to be ultimately delivering us a new and interesting series of possibilities for markets. I mean, do you think, for example, markets may be differently organized or operated because of quantum computing?
Definitely, but for sure, it's hard to predict how things will emerge that way. What's really going to happen is that, like I said, high frequency trading and the way that options are modeled, everything fundamentally will change with quantum computing. That we invest or trade is no longer going to be relevant or necessarily profitable.
Right. Interesting. Necessarily profitable. So I suppose that is the other gazillion-dollar question, because of course what you're mentioning is the attack dogs, if you want, the Formula One teams, as it were, who are always interested in advanced technologies. They seem to all be investing in quantum at the moment and testing it to see if they can actually deploy it. Do you think that quantum computing is going to be a widespread used tool, whether it's 10 years from now, 15 years from now, or whatever, or is it going to remain a kind of niche interest?
For sure, I believe it will become the standard once we sort out all of the hardware challenges. It will be applied to virtually every use case and scenario industry, just as classical computing was. It will just be likewise a rollout across every domain.
Okay, so in that case, does quantum computing eventually end up simply taking over all of our computing tasks, do you think? And effectively what we have had already, binary computing, just simply becomes kind of an artifact that sits there alongside the fax machines in the science museums of the world?
I think there will always be a use case for classical computing. So it's all going to be built around cost optimization. So with that being, there could be situations, use cases or scenarios where using classical computing is just more efficient and cost effective than moving to a quantum model. So we aren't going to move towards quantum hardware computing overnight. As you probably know, things move slowly. Ultimately, outside of high tech and high finance, such as governments, it will probably take a very long time for this to be fully implemented. But just as AI is now seeping into companies, governments, and all domains, that's essentially what will happen with quantum computing.
Okay. So that's quite fascinating altogether. So when you look at this whole scenario, what's going to be coming together with quantum computing, what's the kind of timeline? I know you've talked about roughly 5 years, 10 years in the future, and I don't want to tie you down to, the 31st of December, 2032 or something, but what are the next series of milestones that we can look at in terms of quantum adoption for quantum finance?
The key challenge is stability at scale. So that is really the milestone behind unlocking the actual usability of the hardware itself. So beyond that, it's hard to say, but that's kind of where things are stuck. And then also cost optimization. How do we deploy and build quantum computing at scale where it's cost effective relative to classical computing right now? So those are kind of the two main things that we need to overcome.
Okay. I understand. And so therefore, when you look at this quantum environment going out, how does that ultimately reshape finance? Does it simply make finance all the more efficient because people will be able to use information more perfectly? Or does it open up other possible opportunities for finance as a whole in terms of the way that financial markets might operate?
So quantum finance and quantum computing applied to finance, quantum modeling applied to finance, it won't exist in isolation. It's going to immediately be paired with AI. So if we look at how AI is advancing currently and where it's going, in 2035, we can imagine that AI will be even more advanced than it is now in a significant way. We're still at the very early stages of language model development and implementation application, but it's going to immediately be paired with quantum computing. And with that, things will be so fast at such a scale and analyzed in a way that it's going to make retail trading basically impossible. The human mind won't really be able to compete or understand or execute in a way that AI combined with quantum computing can. So it completely rewrites how investing is done, and that's where it's really a singularity type event. It's once we kind of get to that level, we don't know what happens next.
Gosh, that's a lot to unpack in one fell swoop, I have to say, Hayden. And I mean, it's really quite fascinating altogether. So, singularity kind of event, the whole world is going to change potentially for the way financial markets move. Everything is going to be a whole new brave order. And actually, we can't really tell what's going to happen, but the markets may be moving so quickly that essentially retail traders are unable to get on the bandwagon of, say, day trading and things like that as they've been used to over the course of the last decade.
Yeah, the classical like retail trading in the sense of drawing trend lines and trying to invest in that way or day trade, that it's going to be fundamentally different and not just looking at the screen and pressing a buy or sell. So whether retail traders can still be profitable in that environment without also using quantum computing paired with AI, that it's probably not going to be possible.
Fascinating, quite fascinating altogether. Well, I have to say, this has whet my appetite so far, but I think a lot of the audience are probably going to be sitting at home feeling like that kid in South Park in the classroom who wants to be excused class because their brain is full. I mean, it's been an action-packed discussion over the course of the last 3/4 of an hour, Hayden, trying to get our heads around this fascinating new world of quantum finance. So let me just ask you, I mean, the one question that we ask every guest on this show as we're wrapping up, Hayden Van Der Post, where do you think the capital market revolution goes next?
Sorry, I didn't get that last part.
Where do you think the capital market revolution goes next?
In the meantime, I believe that AI is going to be the current focus application. There is still a lot of work use case to be done there. And that's where the next 5 years really are. And after that, we're moving towards quantum computing mixed with AI. But ultimately, the macro environment for the global economy, there is a lot of headwinds. So in terms of investing scope and scape, I don't think that there's just a lot of challenges for a lot of different countries right now that I don't know if AI really is going to be the focus for 5 years. Yeah, I would say.
And on that note, AI the focus for 5 years, but look out for the next decade, which is going to be the decade of quantum computing, ladies and gentlemen. If you want to get ahead of that curve, catch yourself a copy of Quantum Finance by tonight's guest, Hayden Van Der Post, who has joined us all the way from Seattle to myself sitting in London, England today. Really been a joy to chat to you, Hayden. Thank you very, very much. Thank you, ladies and gentlemen, for interacting with us during the course of this show, particularly those of us who've been giving us a few likes on the way through, which is really, really useful. Links of Hayden's book are in the social media stream as I'm talking right now. I would like to say a huge thank you to our production team today, AJ Dessery and Herminia. My name is Patrick L. Young. Next week, we're going to be talking about, that's an uncomfortable topic. The uncomfortable truth about money is going to be IPO-VID number 188 with our special guest, fund manager Paul Podolsky. Looking forward to that. Same time, same place next week. In the meantime, ladies and gentlemen, it only remains for me to say thank you very much for watching. If you've got any marketplaces you want built, don't forget to reach out. If you want to understand what's going on in the world of marketplaces and exchanges, don't forget Exchange Invest, exchangeinvest.com, the exchange of information. And we look forward to seeing you next week. For now, I want to say a huge thank you to today's terrific guest discussing quantum finance and breaking it down so elegantly, Hayden Van Der Post. Thanks for watching, and I wish you all a great week in life and markets.